Thursday, September 5th, market analysis. Stan Ehrlich, good morning, 9:45 California time. We got some new signals and some more downside progress in general with the stock indexes. You guys know I've been preaching about the damn thing going down starting in September, although this year it started a little earlier than that, August, middle of August, into the October lows. Again, I keep preaching about this because I've done it for the last few years, and the last 2 years have been fabulous. So, in the last 30 plus years, only about 3 or 4 times has the S&P 500 failed to make, specifically during the calendar month of October, a low that has produced good results. Now, some of the lows are not that big a deal. Some of the lows are spectacular. October 16th to 22, the bottom of the bear market, and the first day up in this current long-term bull market. And I'm not getting bearish on you. I'm getting reactionary. It's going to be a short-term downside correction. I'm trying to figure out exactly how far it's going to go, and I think I know October when it's going to bottom out. So this month, I'm expecting in general the market indexes to drop down. Now, the first area of support is the lows that were made, let's just say they're not all the same date, early, mid-August, only last month. But they're not all that far away from current quotes. So if we can get down there, depending upon how you do it, we should be oversold and ready for a bit of a bounce. Now, that's not necessarily the downside objective I have in mind, because we do have the makings here of a double top formation that's even a little bit better than this one in some indexes. And if that's true, then you take the highest high or the average of the two highs, about right there, and I am going to draw a line in and start it and go straight down to the bottom of the break between the two highs. And that's what I call my stick. So if you take this measuring stick and drop it from the bottom of the lowest low between the two highs, or the average of the two highs, down, you get a downside objective of about 45.45. That's correct. So if we break these support areas, the lows in August and the lows in April, that would be my objective. Now, that's the most I can expect, but it's very possible that that's too low and we're not going to get down there. So I'll figure it out on the way as the market tells me what to do. You can never make the market do what you want it to do. You always have to move with it. You always have to read it. So E-mini, short term, 5-minute chart, broke out to the downside, new lows to the move, going back real quick to the daily chart and zooming in, so to speak. There we are, new lows, broke a little support area. And now after the big downside breakout on Friday, yay, we have follow through on Monday. And then I'm at Tuesday, Monday was the holiday, and today, Wednesday, or Thursday. What am I saying here? I'm sorry, got things mixed up. Tuesday was the big breakout day to the downside after the holiday on Monday. Okay. Follow through yesterday, Wednesday, today, Thursday, we're getting a little more follow through down, around 24. On the spider numbers, that would be approximately 2.5 lower. Back to the 1 minute. This is rallying at the moment. I'm thinking this number here, 55.15, is going to be a rally high in the next 30 to 60 minutes, and maybe even less than that. And if it does stop right there or very close to there and turn down, that would be just, classic resistance rally, short sale price level ideas. Okay, spider. Unfortunately, we didn't get a sell signal at the very top of the market per se, but if you were to be using the kickers that I have loaded at this moment, and they're different than yesterday's, I did it on purpose. I slowed the stop down some in order to stay with the trade, to see how much I can milk out of this longer term. Now, you really can't do that or shouldn't do that real time, real money, because leave the strategies alone. But you can, as long as you're not stopped out already, of course. You can't put trade back on the books again. That'd be nice. Now, with the details, you might be asking how come stand stop actually went in the wrong direction here on 8/23. And the reason is on 8/23, we have a gap up market on the morning of, oops, what do we got here? Just a second. 8/26. Yep, on the morning on 8/26 opening, I should say, gapped up, hit the level at which our trailing buy stop on the new short from the previous day was, but we have something called gap code, and we automatically raise our stop just before and don't get stopped out unless it goes all the way up to there, and this one didn't. And it saved the day completely. So instead of being out with a loss, the market tried a few days later to make new highs, and again, still not hitting our trailing stop. And now the trailing stop is just protecting a very small profit. The actual profit is much better. So I would consider, lowering the stop again. QQQ, we got the top of the market to the exact day. If you're using the same kicker, we are still short. This is our trailing stop, 468 at the moment. Not that it's it won't stay there, I guarantee that. As the market moves down and or up, it's going to start moving. So, and when it moves down in particular. Now, great. Nothing better than having a sell signal at the top. I'm looking for, again, the low on specifically August 5th, in this case, to be challenged. And this is not really a double top because I think this low high is too much below the previous high. So I'm not calling that a double top at all. But keep watching. So I'm looking for a minimum downside of 423, call it, and lower than that by a lot, maybe down to 396, maybe 413 to 396. Next chart. Got short on an ER3 overnight trade close to the opening on the 23rd, with the signal being the previous trading day. Trailing stop, now locking in a very, very nice profit. We're short from back here, and we're almost low and last. This is doing very, very nicely. I don't have any problems with this. I would consider lowering the stop again or tightening up the kicker a little bit. NQ, NASDAQ sold a high day. That's the signal. ER3 gets short the next trading day. That's what I'm showing you. And it is still short using the exact same kicker as the other chart. Now, the details on this trade. Rallied up, hit our short sale trigger price for ER3, had a little loss, profit closed with a small loss, a little bit of a problem the next day, biting your nail type thing. Now it starts to work out, and soon our stop starts to come down. Luckily, not too fast in this case, and I did make adjustments to the stop to make sure I'm not out of the trade. I'm going to try to milk this one for all I can as far as the downside is concerned, because it could last a month or more and be huge. I think it has the makings of that. I think we might make new lows for the day before the day is out and close near the lows. Now, the YM daily data chart, Dow Jones Futures, is a very, very nice double top. The highs for the wicks on the rally high July 18 were extremely close to the high of the wicks around the end of August, the first couple of days of September. Great. Double top, bearish engulfing, got stopped out that day when the market started to head south, and it's now testing a minor amount of support. Next chart is the detail on the previous great long position that we got stopped out of, and we're now flat for the moment on this YM. Russell, not the same story. Major resistance areas it's having troubles with. So I think it's going to come down at least to 1992 and maybe even down to 1770s. And here's the short term on the Russell, making new lows for the last between 2 and 3 weeks. Next, we've got the bond market. Now, the green circle represents the month of October left to right, and the vertical measurement of the circle diameter is the zone price zone in which I think bonds are going to turn around and start to go back up again. And I've got the same circle written, drawn on the 10-year note chart in a moment. So I think we're about to stop rallying now. We are not particularly overbought, so that's not the reason. It's the resistance area and a major trend line also that we're bumping up against, and in which has stopped it quite a bit of times. 10-year notes did push through a little resistance for the last few days, a couple of weeks, that is, and now in another area resistance, but is almost overbought. And even though it might come up just a little bit more, I think it's about ready to turn back down again, break these lows in the last few weeks, and wiggle its way back and forth down into the green circle, which is October, and the price range is different than the 30-year long bond, obviously, but into this price range I expect. Looking for that break. Next, crude. Broke the bull trend line yesterday, day before yesterday, actually. Yesterday, huge downside follow through. Today, the rally high is right up against the trend line, stopping it because now that trend line is a resistance line. And it stopped right at the line earlier today. Now it is almost down to unchanged. I wouldn't be surprised if it made a lower low and closed lower on the day. Next, I'm bearish on, let's go back to notes, sorry, crude, on crude to at least 67.5, probably 63.5. Okay, natural gas, brand new buy signal today, in progress. We are long one scalp and an overnight trade at around the current quote. Brand new signal. We had the low of the market peg to the exact day on August 28th. We got another buy signal on September 3rd, and now a third. Now, just because you get 2 or 3 or 4 within a short period of time does not necessarily guarantee that the market's going to go up bigger, faster, better. It only implies that there's a fairly strong bottom trying to be built. So I don't have a fair correlation, I could tell you honestly. But this does look like a double bottom developing. The low, which is the green bullish engulfing, automatically, August 28th, is super close to the exact same low price of August 5th. So this is the resistance, the high between the two lows. But if that's broken at 2.453, give or take a few ticks, 2.456 maybe, then it's supposed to go up, and I'll draw that line in for you real quick, taking about the average of the two lows and going straight up to the highest high between the two. That's your measuring stick, and putting the bottom of it right at the previous highest high between the two lows. We have an upside objective of 2.9, let's call it, a little below 3, if the double bottom works properly. But this is how they begin. Next chart. Heating oil. Buy signals haven't worked. Maybe short-term minor scalps, profits, and some losses as well. But now we're getting back toward oversold conditions, deeper into broad support area, and I think it's due for another bounce. But I got to be bearish because all the resistance is just overhead, and we've made new lows for quite a long time period. I'm looking at this, it's been new lows for a little over a year. Bearish, don't really have a downside objective per se. Nope, just going significantly lower. I think down to 2, and even below that probably. Next, gold. Top of the rally so far, bearish sell signal on the high day. Now, using this kicker, we did get bumped out yesterday around the high, but it is up more today. I'm still looking at this as a top, though, and if I was willing, I would change the kicker on this to a lot slower, and then manually re-enter a trade so that this strategy would follow the new short. But we're not going to go there. The high today is up against that resistance line, and we were overbought. We're still basically, I think, heading lower. I'm looking for new lows in the next few days to a week and continue to work its way down, probably to 2403. Downside objective, major support 2350. And if that doesn't hold, broad top formation of some sort, not really a good label for that, at 2178. Downside objective, if you wanted to call it, say, a double top or a quadruple, but they really don't exist. It's just a big trading range. Next, silver. New lows to the move only a couple of days ago on Tuesday. This little rally is not a surprise. We bounced off a support line of mine, and there's a little bit of support in new low ground. We did get the bottom of the break on August 8th, the exact low day, and got another buy signals 2 days later, and there had been a very nice rally. But now we're back in the bear mode again, and I think we're going to soon challenge 27. The downside objective is 2450, and that's because the larger head and shoulder top has that downside objective, and there's nothing wrong with the way this pattern has been developing. Same with platinum. It's the same thing. I don't need to repeat myself. Downside objective 810. Next, copper. Well, this is a different story. We are actually getting today a bullish engulfing, and the lows are close enough, I think, and almost touching support to call this maybe a double bottom. Okay, and if that's true, let's do the measuring real quick. I'm going to take this price level and count from the lowest low to the high right there and grab this and then go right up to there, and that's it. So if this works, we'd be looking at 4.6. But this is a little premature to say it's a double bottom. It's just barely having its first reversal off this low. Could be, though. I like the signal. I like the price level. I like what I'm looking at. Next chart, beans did have a little double bottom. It's just looking almost exactly like copper's looking like. Let's go back to copper real quick. Okay, so you got a low, couple of big signals there, and another one just starting. Soybeans. Couple of lows, not quite as far away time-wise, but in the same ballpark price level it comes down to, and it has a green bullish engulfing. So why can't copper do the same damn thing that the soybeans are in the process of doing? They're almost making a new high. Our stop is still trailing its way up, locking in a profit, and it's been, what do we think, about a week and a couple of days. Looking great. Upside short-term objective 1037. Next stop is probably the end of the rally. If it can get that far, 1105. And I'm not so sure it's going to get that far. Oil, similar, not the same. Bullish engulfing, not quite at the bottom, unfortunately. Coming down a little bit the last day or two, but stopping around some support. I think it's about to turn up. Right now, we're up 98 ticks, so that's decent. But it has to really get up into that yellow zone resistance area again, and maybe we have a chance of getting up some more after that. I don't trust rallies in the grain complex at this point. They're still basically in a long-term bear market with a short-term bounce of some sort or another. We have bounced very nicely in soybean meal. Now it got overbought the last couple of days at a bear trend line or a tiny bit above it. So I think meal is actually in the process of flip-flopping back down. Basically neutral to longer-term bearish on soybean meal. Wheat, corn first. Buy signals have not been working. Too bad we didn't get one at the very bottom. That would have been a whopper, and we missed by one single tick. The low on this day was the exact same low as the previous day's low. That coulda, woulda, shoulda generated a bullish green buy signal, but we came within one tick, and it did not happen. Okay, so pretend. And now we're up this far. I don't think it's got much more to go, close to overbought, and it's going to turn down again. Wheat, buy signal at the bottom. Complementary one slightly after. And now we got bumped out of a small profitable trade in 2 days today using the current kicker. I might try slowing that down for tomorrow and staying with the trade, but I'm telling you in advance if I do it. So I'm not trying to cheat at all. I'm just trying to show you the what you can do with this strategy. We do ever defaults. They do have good results, but making adjustments along the line is not 100% discouraged, mostly because you don't know how to move the stop typically. That's the problem. Most people don't. Okay, that's wheat. Here comes cattle and hogs. Buy signal and cattle almost at almost the bottom day right there on August 26th. We rallied very nicely for a couple of days, but we're now breaking down and stopped out of our long with a profitable trade. There's your little green dash dotted line. That's the trade line. It hit the yellow stop line. Goodbye, we're out. So trading slightly below our offset on that previous long. I think this is trying to make new lows for the move down. I have to bring up a topic before it's too late. I love head and shoulder patterns. They're my favorite technical analysis pattern. That's the first shoulder low right there on August 5th. If this is the head of the formation, which looks very plausible, and the timing is about right for this date to be exactly right timing wise. And I'll even measure this one for you real quick. You take the first shoulder low and measure it to the same day the market bottomed out, and that's the number of days. So this is my time stick, and I'm a little short. I want 2 more days, and a little bit lower would be perfect. So on Monday, at 176 on 0.22, if we do bottom out and start to go back up again, that would be the exact time and price for a last shoulder low. That doesn't happen very often, very, very rare. So this could be a day or two early and the low. It could be a day or two late and a little lower. Somewhere in this area, and it just barely kind of got into it today, I think we might have a shoulder, but I'm premature on this, so let's just see how it develops. Otherwise, I'm basically looking for this trend to work lower. I am bearish, period, but I do see the possibilities here. And so if I find all of a sudden a bullish engulfing, wow, I'm going to flip to bullish pretty instantly. Next, hogs, overbought, bearish engulfing almost yesterday, not quite low enough to get below the low of Tuesday. So starting to come down. First support, 79.30. Next support, maybe a little lower than 78.50. And then specifically 76.60. Yep. And then lower and lower. Let's see what happens. Back to the E-mini. I see we've got the little bounce in progress. Gosh, did I hit that price? Oh, not quite. I came up with 55.15 at the beginning of the YouTube, and it got up to about 55.12. Close. You have a great day. Profitable trading to you. Stan Ehrlich.